I'm Greg Hunter. Welcome to USAWatchdog.com. With us once again, the man who wrote this best-selling book on precious metals in this century, gold and silver. It is Mike Maloney. This is the most recent updated version of this book, and I'll bring him on from Puerto Rico. You can hear the ocean in the background. You can see on his black TV screen over his right shoulder that the palm trees are blowing in the window. It's a reflection in the window. Mike Maloney, thanks for joining us today on USAWatchdog.com.
Hi, Greg. How are you doing? And it's great to be here.
People can hear the wind and the ocean, and in Puerto Rico there, when you're on the fourth floor, I know the waves are coming in and all that. I just want people to know that's what that is. It's not static. It's nothing else. It's just actually from the beautiful beaches and 70-degree weather that you're having in Puerto Rico.
I can see the waves right down here where they're breaking, just below me.
That's super. Well, a lot of people want to know what's going on the gold and silver market. It's been just killed. In some of your latest, one of your latest videos, you bring up the zero hedge stories. More information about exactly how they did the manipulation, the laughing, the emails, the smashing. You had charts up about how they've been doing it. It's a pretty much a well-known fact now, not a conspiracy theory, but a conspiracy fact. And what a lot of people want to know is, Mike Maloney, how long can this go on? One guy asked me, one email asked me from the UK, said, ask your next gold expert, that'd be you, and silver expert, can it go on indefinitely? Can this manipulation go on forever?
The types of manipulations that they were doing here are short-term smash downs, but they have a cumulative effect, though. It can't go on. Yes, it can go on forever, and no, it can't. There's a couple of different types of manipulation, and they do get overwhelmed by the free market eventually. It's during a crisis when gold and silver have monetary demand, when they're no longer treated like a commodity, when the trading patterns are such that it's obvious that this is a commodity that people are investing in. Or trading back and forth, not actually investing. When people take delivery, one of the things that your listeners should remember, that anybody that takes delivery of ounces, they don't get stopped out. They don't have a time constraint like you have on a futures contract or an option, where you've got to sell at a certain point or roll it over, and you have to basically lock in a loss. If somebody's trading and they set stops, they've automatically locked in a loss. When you're accumulating ounces, then you're invested, and if it drops temporarily, you don't lose. You've still got your ounces, and the next time it goes up, they're going to be going up in value with it. I just use price pullbacks to accumulate. But this manipulation, the thing that's great about these texts and emails being exposed, that Deutsche Bank settled $35 million settlement, and the only reason they settled is because they knew that their exposure if they lose a case, would be far, far greater. But part of their settlement was agreeing to turn over a whole bunch of evidence against all of the other banks that have been involved. And the thing is that you can see that these traders that work for these major banks, they don't know the difference between right and wrong, that they think that they are entitled, and it is their God-given gift to be able to take advantage of all of the rest of us, to try to steal our currency. And they colluded. They got these competing banks, got together in violation of all antitrust laws, and they agreed to smash down silver or smash down gold at the same time, basically. And the thing is that these are people that sit on what is called the London fix, where they fix they decide, gold and silver are bouncing up and down, and these like several competing banks will sit in a room in a secret meeting, closed door meeting, and they'll set the price of silver for the day. And there's a whole bunch of wholesalers and refineries and mints all around the world that then can buy and sell at that fixed price for a day. And so it does make life in the precious metals industry a little bit easier, but at the same time, they have knowledge of what the price is going to be very shortly in the future, and they can get a bunch of trades ready and hit go and then announce the price. So they have knowledge of a future event that nobody else has, and they're the ones setting that knowledge. And if you get a few banks together that can then take a huge position one way or another, and it's almost always to the short side, they get to clean everybody else's clocks illegally. So they are actually stealing people's funds. It's an awful thing. It's now been exposed, but you know, I've been making videos on this. I wrote about it in my book back in 2007 when I originally wrote my book, and then I've made videos going back to 2010. We've got a playlist on the Mike Maloney gold silver channel, and there's 11 videos in there. So it goes back a long ways, and people have known about it. They've complained to the Commodities and Futures Trading Commission. Like Ted Butler has been talking about the gold leasing and all of the different ways that silver has been manipulated. And so this is just one of the ways that it's been manipulated. But the question, can they do it forever? These short-term manipulations, yes, but it won't have much impact on a silver investor, because they're taking a position for a very short period during the day and then getting out of that position. And they do that, you can see on the gold charts and silver charts that it's a couple of times a day that they get in and out of these positions. And the price will drop, and then there's a period of time where the New York Globex markets close, and you have free market trading in other parts of the world, and just before they close, it gets smashed down, and then there's it's closed, and then it pops back up when the second the trading starts again, and you can make bets on these things and win a fortune. So they've been stealing from the public. The cumulative effect is that even though they're in and out every day, the cumulative effect is that if they are cleaning the people on the opposite side of the trade, if they are stealing from them on a regular basis, after a while, those people that want to be trading in that market get out of it because they just get punished with losses too often. And so there's less currency then seeking that market, meaning that prices would be lower. And so the great news, though, about this, for me, I mean, everybody else thinks that this is a really bad thing, but there's an opposite side to everything. You get to buy gold and silver at an artificially suppressed price while this is going on. And when it's all over with, it won't be suppressed anymore, which means far higher prices. So if you accumulate something real, if you buy real gold and silver and not some sort of derivative, and you hang on to it, the long-term manipulations will come to an end. The short-term manipulations may not end, but when people flood into this market, the short-term manipulations, the tables are going to be turned, and you're going to see those people get punished a lot, where they actually end up taking the wrong side of the bet, because there's so many people coming into the market that they cannot overwhelm the flood that's coming toward them.
Could there be? I mean, people want to know what's going to actually stop it. And I had Gregory Mandarino on. He said very simply, what's going to stop the manipulations are out and out shortages. Once you start having shortages, you know, you have this artificially low price for gold and silver. They're going to be shortages eventually. Is that what's going to stop this? Shortages of the physical metal?
And the manipulations cause the shortages. When the average price of gold and silver is below mining costs, you have less production. And so the higher the price is, the more it encourages supply. The lower the price is, the more it discourages the supply. So you end up using up above ground stocks. And then when you look at things like the flow of gold from east to west, stockpiles in the countries where all the traditional trading has gone on for decades and centuries, all of those stockpiles are being diminished slowly as gold and silver flow from west to east. I mean, so as you know, when you talk about accumulation and you look at a country like China, between China and India, there is the equivalent of all world production being bought up by just those two entities. And so that means that any other trading that goes on in the world has to come out of the traditional Western stockpiles that are on the Commodities Exchange and the London Metals Exchange and so on. So we're seeing a perfect storm develop where eventually, and it's been developing now for a few decades, but there will be a time when shortages are enormous, when you see the price, the live spot price diverge from futures, and where you see deliverable gold and silver physical diverge from the spot price enormously. Whenever there's shortages, what you see is that you can buy fake gold and silver, paper gold and silver, very inexpensively, but the price of actual gold and silver delivered to your door skyrockets. That's what happened in 2008. You saw gold and silver take a big dive, but the spreads to get something from a refiner or a supplier was just huge. And then the dealers were running out of it too, so their spreads went up also. And so the difference between the live spot price and what you're actually paying was huge.
Oh, you said in your last interview that we're headed for one of the biggest market crisis in all time, and yet we have, of course, we did get a market crash after Donald Trump got elected. Of course, we had all this intervention that somehow people ignore that this is and think it's some kind of an organic market. I've said this before. It went straight down 800 points, straight back up 900 points. In one, 10 minutes. But the futures open up, limit down. It wasn't 10 minutes, but the futures open up, limit down. But you said that we were going to have headed for a big, a crash, but yet we're looking like we're having this huge, one new all-time high on the NASDAQ, the Dow, and the S&P after another. What's going on in your estimation? Why are we getting this big blow-off top in the stock market? And while the bond market is increasing, it's at 10 years at almost 2.5%.
It's very interesting because when the primaries were still going on, and for a little while, when they thought that Trump actually had a chance of winning, you saw gold go up and the markets go down. And then it switched back to no, Hillary's going to win, and gold went down, back down, and the markets started going up. And then Trump gets elected and gold goes down and the markets go up. The opposite of what happened when they thought Trump might get elected. But Trump is probably going to, in the long term, be better for business, and that's the reason the stock markets are going up, and that's and the dollar is going up, and so gold is going down. However, this is a love affair that will probably last 3 to 6 months, and by April or May, you'll probably see the markets topping out, and we are already more than 7 years into this economic expansion. The recession was 2009 and early 2010. So, or it started in 2008 actually, and ended in 2009. I'm sorry. And so we're over 7 years into this expansion, almost 8, and it's now, right about now, it's becoming the third longest economic expansion in history. And toward the end of 2017, in the fall of 2017, if it goes on that long, that means it'll be the second longest expansion. And if it goes on another 6 to 9 months after that, it would become the longest economic expansion, even though it's the weakest recovery we have ever had. This recovery that was purchased by the Federal Reserve for $3.2 trillion of base currency creation, which is equivalent to what we It's 4 times what we produced in the previous 200 years, as far as base currency goes. This recovery was a purchased thing. We're near the end of it. It can't go on forever. Recessions always come sometime or another. And when this next one comes, they have the manipulations that they have done have the free market so far out of balance that when this crash happens, the first in 2000, it was the stock market. And they manipulated it. Alan Greenspan lowered interest rates to reflate the stock markets, and he accidentally created a real estate bubble. He didn't see that coming. And then, so the second crash was stocks and real estate. This next crash is stocks and real estate and the end of a 35-year-old bond bull market. And bull markets don't go forever. 35 years is the longest I've heard of for any bull market. Bonds eventually have to reverse direction. And so you're looking at the possibility of a stock, real estate, and bond crash this time, because real estate is back into a bubble. By the way, Robert Shiller has been warning that the PE ratios on the S&P are back up to like 1929 levels.
Yeah, 27, 28.
Yeah. So we're in that rarified territory, the nosebleed territory. When a crash happens, it's a big crash. And we're just right around the corner from a recession. It's just not possible to have an economic expansion that goes on forever when you have a fiat currency system and a debt-based monetary system. Debt creates the business cycle, which there's a period of too much borrowing, overinvestment, then the free market corrects that, and it's called a crash.
What about this bond market? If you think that's going to be the thing that takes it all down, the bond market, which rates have gone back to this almost 2.5% 10-year Treasury rate. Could that sink Donald Trump's nirvana? And not that I want it to be sunk, because I like him and I think he's better than the alternative. But could the bond market sink the economy? And why hasn't it sunken already with this big move up to 2.5% on the 10-year?
Bubbles can persist longer than you think they can. The markets can remain irrational longer than you can remain liquid. That's a very old saying. But what that saying suggests, that the markets can remain irrational longer than you can remain in the markets and liquid, is that eventually, though, it might the bubble might outlast you, but eventually the tide does turn. I think it was a trader, his last name was Graham, Benjamin Graham, that said in the short term the markets are a voting machine, that they go the direction that the masses say they should go, but in the long term they're a weighing machine and they seek fair value. And right now we have a bubble in the stock market, a bubble in real estate, and a bubble in bonds. And in the long term, the markets are always a weighing machine seeking fair value, and the centuries of data have proven that. And even Robert Shiller's data goes back almost to the Civil War, and it shows that the markets seek a fair value equilibrium. They're there very rarely. They're usually either undervalued or overvalued. But right now, they're in nosebleed territory on the stock markets. The real estate bubble isn't as big as it was, but these ultra low interest rates have pushed us back into bubbles in most major cities. And the bond market, it's a 35-year-old bull market. I just don't know how this can continue on forever. I have not looked at a bond market chart yet, so in the past couple of weeks. So the interest rates that you're talking about on the 10-year Treasury, I don't know if it's broken its trend channel, but the market has been, the yield has been going down in a trend channel, and it's just a perfect trend channel since the 80s. And the price has been going up in a trend channel. And you can take a ruler and draw a line on either side of these things. Now, I don't know if the 10-year has broken that line. You were talking about the 10 years recent move lately. So I'll take a look at it after this interview and see what I think.
Okay, and well, good. It's just a stunning move. I mean, at Halloween it was 1.79, 1.80. That's what it closed at. Now it's at 2 point, almost 2.5. I just think a lot of folks out there are kind of whistling past the graveyard. But I digress. Listen, I want to talk about India.
Before you get off of the bond market, I do want to say one thing.
Okay.
I am expecting that the next, when this recession starts, it's going to be a deflationary event. There's a real good reason here. But in the deflation and in a crisis, you are going to see investors run towards safety in this next thing, and bonds will get one last pop. And people will think that bonds are okay. They're going to be running toward safe haven assets, again, like they did back in 2008. They're going to run toward U.S. Treasuries and gold and silver. Those are the safe havens, and that's it. Then there's going to be a bunch of people that figure out that bonds in this rarefied territory where yields are close to zero and where prices are so high are not a very good deal. So you're going to see, I believe, one last pop in the bond market during the onset of this crisis before all hell breaks loose.
Okay, good one. I want to talk to you about this, the war on cash and also war on gold. And India, a big country of, over 1 billion people. And, the Prime Minister Modi there is...
and one of the world's largest gold consumers.
Yes, and they're going after gold, and they're going after a currency, at least in big bills. And they say it's, for taxes. Also, Venezuela, they're cutting out their big bills. I mean, you're seeing this trend around the world. Why do we have this war on cash and this war on on gold, especially in India, which is very frightening? Why are we having that? And can it come over here to America?
Absolutely. All this stuff that's happening can eventually happen to the United States. Will it happen right now? I doubt it. But the thing is, we are not exempt from the laws of economics. And our politicians seem to think that we've got some special status that make us exempt from the laws of economics. But we do a bunch of banana republic spending, and our economic policies are just as crazy as, we haven't done all the socialist policies that are as crazy as Venezuela. But a lot of our spending is just absolutely nuts, the way politicians do these deficits. And if you think we've had big deficits in the past and they've gotten smaller recently, wait until you see the next recession. But this war on cash, every major bank on the planet and the world's central banks are now experimenting with blockchain technology. And that is what will allow them to completely digitize the currency, which is what they have to completely eliminate cash. And the problem is not enough people have, I went to some Bitcoin conventions, some conferences, and listened to all the experts and studied Bitcoin. And I'm a precious metals dealer, but at the same time, I respect anything that the free market comes up with that's an alternative to something the government manipulates or banks manipulate. And Bitcoin, the systems behind it are extremely good. The distributed network, full consensus, blockchain technology. Distributed network means that it's, you're running this program, the blockchain, which is the master ledger for Bitcoin, and it's being run on millions of computers all over the planet simultaneously, and they're all double checking each other to make sure that all of the ledgers agree. And so this is the first time where you've got a system, a program that's written so well that nobody has been able to, they really can't figure out how to make fraudulent transactions. And the great thing is nobody's in control of it. And what this does is it inverts the power structure. The people are at the bottom are in power versus a few at the top deciding on what's going to happen. Now, if the world's banks and central banks implement blockchain technology that's centralized, this is dangerous, because at that point, a government, if the Federal Reserve is running blockchain technology on all transactions that happen with U.S. dollars, they can, as much as they can, eliminate crime. They can make it a lot harder for money laundering and stuff like that. But also, if the government decides that they don't like you for one reason or another, they can just switch you off as a person. They can make it so that you can't make transactions, you can't buy food, you can't pay the rent. I mean, they can literally, so they don't have to put you in jail. They can put you in jail without putting you in jail. You'll be begging for food on the street. I don't like. I have a.
And do you think that? But do you think? Hold on, let me interrupt you here. Do you think that's what the India thing is all about? Why, how they're war on cash and they're wanting to confiscate gold? That's a big country. It's not a small country.
You know, they've eliminated.
Is that what they're going for? They're going for a digital currency, and they're trying to destroy any other currencies.
Yes, but one of the things that they're doing, they're eliminating a couple of banknotes, but they're also going to be introducing an even larger banknote. Like Venezuela is, they're right now eliminating, what is it, the 100 Bolivar note?
Yeah. Yes.
But they're going to be introducing a 20,000 Bolivar note, and that one's only going to be worth $3 US. The 100 Bolivar note is worth nothing. At this point in Venezuela, you do need wheelbarrows to go shopping. They're in the early stages of a hyperinflation. And what they did, the stupid thing that they did, countries have done this for many, many decades, centuries. You introduce a new currency and then say you've got a month to go to the bank and trade in your old bills. I mean, I was in Jamaica a few years ago, and I took a picture at the currency exchange window showing a British 20-pound note that said, on this date, this note will no longer be legal tender. They were replacing it with a different 20-pound note. I've seen this in many countries, and what that usually is they want to get their fingers on everything that they can, and so cash that's out there that's circulating that somebody could possibly do an illegal transaction with, or do something where they don't report taxes on some exchange of some purchase or sale or something like that. All that currency that's in the black market then either becomes null and void, or that entity takes it in the bank and tries to exchange it and gets caught because they're exchanging so much and they can't account where that currency came from. So that's what
India is doing. India is basically,
and Venezuela announced that there was only 3 days to do this changeover, and it's 50% of all of the cash in circulation in the country. And so what Venezuela is doing is basically just making null and void most of the cash in the country, and basically that's a transfer of wealth from citizens to the government. So it's the government stealing from the citizens in this hyperinflation, because they're not going to be able to get all of their 50% of the currency, even the legitimate currency that's in that country, that's in the hands of hardworking people. The banks are going to be completely overwhelmed. There's no possibility that the banks could keep up with changing 50% of all the currency in the country in 3 days. It's not possible.
And in India, with them going after the big bills in gold, same thing? Are they just trying to confiscate individuals' wealth? Is that what the upside of all that?
Yeah, gold's a different story because it threatens the fiat currency. Fiat currencies are a very, very corrupt, immoral system. What you're doing when you look at a piece of a fiat currency, you take out $100 bill out of your wallet, take a look at it. It's a piece of paper with a picture of a dead guy and some numbers on it. That's all. The government has taken a useful piece of paper and ruined it by putting ink on it so you can no longer use it to write a list or some important note. Now, they've made this official, and somehow it magically has these powers where we're willing to trade huge portions of our lifetime. We trade like a third of our entire lifetimes to get paid with this currency. And so it's our lifetime that is in this. And then we trust this unit of currency that somebody else can print more of, thus stealing a portion of our lifetime. If we've got any of this currency, whenever prices go up, when they inflate the currency supply, whether it's the banks doing it through fractional reserve lending, or whether it is the Federal Reserve doing it through open market operations, either way, this is the most immoral act because they are stealing portions of our lifetimes. Slavery is no longer legal. That was when they were stealing present life moments, when you could point at that and say, that is wrong, we are stealing people's lives. Now they steal past life moments. The whips and the chains still exist, you just can't see them.
And what about two final things? What about the war card in the Middle East? War. I mean, the Syrian thing is ugly.
Yeah.
It is looking worse by the day. I think Aleppo just fell. What about the war card over in the Middle East? What does that do to the precious metals market? What does that do to your scenario? You must be looking at that when you're looking at precious metals investments.
Well, the big thing is, does this trigger something larger? You have me at a disadvantage here because I pay no attention whatsoever on day-to-day news, because it adds up to a whole bunch of noise that takes your eye off of the economic ball. Nothing will ever affect your life as much as economics, and the economics of the populace, the society that you live in, determines the political system that you live under. When times get really tough, people tend to turn towards socialism or even dictators. Hitler and Napoleon were both born out of hyperinflations. If there hadn't been a hyperinflation, the Weimar hyperinflation of 1923, you would have never heard the name Hitler. If there had not been two hyperinflations during the French Revolution, Napoleon would have never been a name that you would have known. So these dictate the political systems that we live under. However, if the Middle East triggers something larger and nuclear powers get involved, that is what scares me. You do not want to see gold going up because we're suddenly in a war with Russia or China. And the stuff that we have done to antagonize Russia, we're trying to blame everything on them lately. And I've got a video out there. Russia has a very legitimate reason to be paranoid, to think that outside forces are attacking them. One of the things I did in a presentation from the Silver Summit is I showed this is all on my video channel, so you might want to look up the USSR or Russia and my presentation. There's also some things that are behind a curtain where you have to enter an email address to unlock it. But one of the presentations, it might be a bonus feature or it might be available to the public already, but I show a map of all of Europe and where the USSR was and where the Iron Curtain was, the Eastern Bloc countries. And then I show I'll flip the map. So Russia, the USSR, and the Eastern Bloc countries and Europe, and then we create NATO and we start surrounding them. And then every few years, there's a bunch of new countries that join NATO and creep in, and then the USSR falls apart, and Russia's border goes back quite a few hundred miles. I don't know exactly how many miles. And then some of the former Russian, some of the former Soviet Eastern Bloc countries become NATO members, and NATO is just creeping in and surrounding them. And when you do put this in a higher speed context, it looks like an attack. And so they have a legitimate reason for being paranoid. And there's a video that Putin did back in June or July where he did a press conference that did not get aired anywhere in the Western media. And he's talking about how right now, we have this this treaty with Iran on the nuclear missiles to try and prevent them from having nuclear missiles, and they've complied. But we're still installing missiles in, I can't remember which country it was that was a former Eastern Bloc country, but the bases that we're installing and the missiles that we're installing are closer to Moscow than they are Tehran. And the thing is,
Romania. I think it's Romania.
Yeah, Romania, right.
Okay.
And those missiles can be loaded with nuclear warheads. And this is what several years ago, the United States stepped out of the anti-ballistic missile treaty, and that ended that treaty that was between all of these countries to not do missile installations like this. And our excuse is to put in anti-ballistic missiles into Romania to protect ourselves from Iran. But those can become missiles that can then attack Russia. And he is warning how destabilizing this is, and that their only response is to escalate their offensive weaponry. It's the only response that he can give to what we're doing. So the United States has actually kicked off a new Cold War with military escalation between us and the other superpowers. It's dangerous. It's really dangerous. And you do not want to see gold go up for this reason. If we got into a war with or it became or even got close, you'd be seeing gold gapping up to like $5,000 an ounce, $10,000 an ounce. Now, it's better to have gold than not in that situation, but it's not a situation that you ever want to see for any reason.
And final question: how long do you think this Trump rally goes? Are you saying the Trump rally will be over in the middle of next year? Is that what you're thinking?
Something like this, a love affair like this usually lasts around 6 months or something like that. So I think by May or something like that, you may see the market's top, maybe June, and then roll over.
So you think the stock market will go much higher from here? You think the stock market will go higher from here? Is that right?
Maybe, maybe not. I mean, I'm not Nostradamus. I just know that there is a recession right around the corner. You cannot have an economic expansion that goes on forever. This is, by the way, the weakest economic expansion on record in the history of the United States. But it's becoming one of the longest. Right now, it's right in about the third longest. And if it goes on for another 6 to 9 months, it'll become the second longest economic expansion in U.S. history, which means the odds of it going on much longer become greater, and the odds become greater and greater that we're going to go into a recession very soon. And the odds for this economic expansion, all the good times, the partying that's going on, that is the odds are becoming very, very low that will continue. And I don't know if it was before we started the interview or in the interview, we were talking about Robert Shiller's data on PE ratios on the S&P.
In this interview, you talked about it.
They're in nosebleed territory again. So there's a recession coming. With it is going to come a spectacular crash. This is something that they have just pushed all of the. There's no balance. The free market is not balanced. It's been manipulated all over the place. The currency supplies, the stock market. Most of the trading in the stock market is all of this high frequency trading where the big entities are trying to spoof everything and they fleece the public. It isn't as much the public in the stock market anymore, so it's phony. Well, what happens when that trading suddenly changes? That means that you've got most of the volume that's run by computer programs, and when the computer programs all think the market's going the other way, they're going to be taking bets they're going to be shorting. And so the market will go violently the other direction. So it's a setup that's a perfect storm basically for gold and silver. However, I think temporarily gold and silver will probably be taking a short-term dip here, and then I think after that, though, I think it's off to the races.
Mike Maloney. He's redone this book. This is the new updated version of it, Gold and Silver. You see Mike on the cover here, and it's one of the best-selling books, the best-selling precious metals book of this century. Mike tells me, and I don't doubt him. He's a very smart guy. Mike Maloney of goldsilver.com. Mike Maloney, thanks for joining us today on USAWatchdog.com.
Can I add one last thing, Greg?
Sure, go ahead.
My presentation at the Silver Summit, that book that you were just holding, that is written around a speech that Ben Bernanke gave back in 2002. Back in 2002, Ben Bernanke told us exactly what the Federal Reserve was going to do in the next crisis. The paper that is on the Federal Reserve's website is called Deflation, Making Sure It Doesn't Happen Here. And Ben Bernanke gave that speech in November of 2002. I read it and wrapped my entire life around that speech, and that's where all the predictions in my book came from. Of the things that they listed, if you go and watch that video, you're going to see a section of his speech, and then I put up a chart and I show you that this thing absolutely came true, and you can check that off the list. And so I go down all the things that he mentions, and 8 out of the 10 things have been done once. They're going to do them again. They will probably do the other 2 things, and your listeners need to know what those other 2 things are, because anybody that had read his speech before the crisis and placed their bets came out with huge winnings, just knowing what the Federal Reserve was going to do in the future. And so if they go to my YouTube channel and watch the Silver Summit presentation, they'll see the future laid out for you. Some of it has already come true, but the next decade is also going to be dictated by this one speech that Ben Bernanke gave.
We're talking thumbnail, cleft notes. We're talking inflation, not deflation. That's what they're going to shoot for. Inflation, not deflation.
Absolutely, but I believe that the amount of inflation that they do is going to be dictated by the amount of deflation that the free market is trying to provide to put things back into equilibrium. And it's going to be huge. So it is really worth finding out the roadmap, which you can turn into a treasure map, that the Federal Reserve laid out back in 2002. I turned it into a treasure map. That speech is the reason I wrote that book. It's the reason that I opened goldsilver.com, and it's the reason that my predictions have been coming true. Most of my predictions that I made in that book have been coming true, and you can check them off the list, and they're the things that Ben Bernanke said that the Federal Reserve would do in a response to the threat of deflation.
Mike Maloney, goldsilver.com. You can go on there as your starting point to find all of his stuff. Mike Maloney, thanks for joining us today on USAWatchdog.com.
Thank you, Greg.